What's up, crypto junkies? Jay coming at you. Yes, I got my face on the screen. Just wanted to show you that I am still alive and gonna get into this video today. This is specifically gonna be catching you up on gold and silver. If you don't give a flying about gold and silver, then you just wanna go ahead and avoid this video. Click on to the next one. We got some other stuff new on the channel hitting this week. Don't worry about it, but I wanted to catch up. The last video I shot was back on like the 16th or 17th. Not a whole lot of new data, but I just wanted to bring up a few things and reiterate a few things again to you. Let's start with gold, and let's start with total supply, what it costs to mine, and just these fundamental details that I think a ton of people don't know, okay? The overall agreed upon amount that it costs to pull gold out of the ground and get it into your hands, get it refined, all that good stuff is about $1,200. The last video we shot was right here. This was all we were seeing, right there. So on this edge here. So it's just like that. Now we've got more days that have now gone on. This has now proven itself to have been a primary, amazing couple buying days. So we had 1, 2, 3, 4, possibly 5 buying days. If you're following that simple RSI strategy, which is buy when it's below extremely oversold, and you could sell when it's above over bought, okay? Or just continue to hold on it. I got a video coming out this week on new portfolio strategy and kind of what I'm doing that that you can check out as well. Oops, okay, let's tighten that up. So great buying days. Now, I think due to the fact, why did this go down, right? That had to do with the strength of the dollar at the time, and it's still, the US dollar is still really strong, and other global currencies being down. Now, the thing that's interesting is a lot of people are starting to move away from the US dollar, which that puts us in hyperinflation territory because there's a lot of printed dollars out there. When those start coming home, then everybody starts, it's a money grab, and everybody starts using those dollars, which creates the hyperinflation environment. We'll talk more about that a little bit later in the video. So anyway, it cost about $1,200 and we bounced at $1,175. So that was very interesting to see that bounce that low. When is the last time we saw that? I brought this up the last time, but we haven't seen that since January of 2017 on its way up on a nice little bull run there. So effectively, we have broken out of this descending wedge as well, because you look here, well, we've slightly broken out of it. We've got a descending line channel kind of going through here, and I believe we're broken above that now. And it looks like we might be kind of retesting that. We're floating in the not quite $1,200 territory, so it's not confirmed yet that we're gonna break out of this, okay? It's been flip-flopping over the last couple days. Yeah, we dipped down into a low that we haven't seen in a very long time. Why did we do that? I believe it was because the dollar was really strong. Global currencies were down. When they're down, they can't pay their debts, let alone buy commodities. But we are seeing this overall trend happening, this macro trend, which is where a lot of the US dollars are starting to come home. Chickens come home to roost, as they say. And so now we have pulled out of this, bounced out, and now fighting at the, let's call it break-even point for mining. Okay, so you're up to speed on that. We are overall, let me bring this up onto the screen. According to this report, published August 2nd, 2018, is that the gold demand is up 3%. Right now in at the end of quarter 2. So it is up 3% in quarter 2. How much overall gold supply is there? Okay, total above ground stocks. There is apparently 190,000 tons. Now, this is not including ETFs, ETNs, or any paper-styled gold. And I want to note that because overall, the expected amount of gold on this planet is not enough to go around for everyone. Brings me to my next point. How come gold really didn't do in 2006, in 2008, in 1997, and in a lot of these other fiat currency crashes and crises? I think people are expecting gold to do something that it's not really there to do. I don't think gold is there to go to the moon, to skyrocket in price right now. I think it is something that secures your purchasing power during time of hyperinflation, during times of a deflation, reevaluation, during times of a government or currency crisis. It just secures your purchasing power. I think cryptocurrencies have a lot more of a upswing potential to run to the moon and go absolutely ape. Okay, gold and silver, not so much. That's my personal thoughts on that. So now you know, 190,000 or so tons of gold above ground, been mined, not paper traded. Now I want to jump into silver as well, but some retail stuff hasn't changed. It's not been plotted out on the calendar, but what we have is the July numbers for retail sales in China was 8.8. We're expecting 9.1. Now the consensus is 8.7. The forecast is 8.5. So another down month, it looks like, will be reported for China retail sales numbers, which when that happens, you know, the Chinese yuan is a big player in the global fiat game. And when those numbers report lower than expected, we do see that affect the market. Okay. Yeah, we're going to jump into silver, but, first, what I wanted to cover, I do believe that at some point a hyperinflation event will happen. Now, the thing that irritates me and the thing that I find very annoying is that most people, they are very good at getting you wound up about the fear, and they don't say shit about what you should do. And what it proves is that they don't have the details, so they can't share them, otherwise they would. And it's because they haven't walked through that doorway and actually thought about what the future would be like. They haven't thought about what this means, what they would need, and how to properly prepare. So the better you can do that, I think, is just a smart play. And if it never happens, then you just get to say, hey, you know what? I was prepared for it and it didn't happen, thank God, and I'm okay. I can always sell my gold later. I can always sell my crypto later. I think crypto represents a different direction that we're moving overall away from a lot of the broken systems that we currently have. But gold and silver, I believe, are there to, gold specifically is there to help secure purchasing power during a time of crises. And silver is also plays a role in that, right? Yeah, I think that's all I had there. I think there's a little bit more, but I might have forgotten. You know, I memorize, I kind of get a general flow of what I want to talk about before I do these, and then I just dive in and let it kind of come out. I just wanted to show you this real quick to wrap up on gold. So this was essentially bouncing at almost the 618, the negative 618 golden pocket. I could have drawn this line a little tighter, which I would have put us just about in there with this wick here. Now we bounced out of that. We had a retest at the negative 382, which is always a strong support on the fib. And now we are up here fighting at the negative 236. We broke above it, retested, broke down, and now we are trying to push back up. Short term, what we're looking for is to close above on the daily and open up above the negative 236. That would be kind of confirmation that besides other, you know, flag patterns and descending triangles and those sorts of indications and lines, that would be another indicator that the momentum has shifted. Okay, volume would be another one. Oh, I don't have volume up. Let's put that up. No? You want to show volume or no? Please? Doesn't want to show volume. Okay. So yeah, that's it. We'll jump into silver now. Okay, silver is we got 1 test, 2 test, 3 test. This is go time because it is today we are in this candle. This is where we find out if it breaks up or breaks down. Now, to fill you in, I didn't know this, and in the last video I shot, I said I didn't know this, but I would find out. So I dug up how much it costs to actually produce an ounce of silver. It is $10.56 according to AmericanBullion.com. That's interesting to know because when less people mine something, the cost will go up. Like Bitcoin, like gold, like silver, when less people mine it, the value of it will go up because just the basics of supply and demand. So there's a halving happening with Bitcoin in 2020 that will cause the price to go up again because we're cutting from essentially, 12.5 Bitcoin to 6.22 Bitcoin per block. All right, so same thing happens here. Silver costs and gold costs fluctuate. And so there is manipulation that happens on gold and silver. And it can't sit there for very long. They can't allow that to happen for very long because miners will start losing money and they'll stop what? They'll stop mining, which will turn the whole thing into chaos. So they can't allow it to happen for too long. So it's a very sensitive game of manipulation that I feel that they play. And so we're now retesting an area from July of 2017. And this was playing beautifully well up until June. And now we have this whole descending channel occurring here. And we've got multiple touch points, 2, 3. So maybe 3 or 4 touch points there. And we probably draw a line here, 1, 2, it looks like 3-ish, for here. So we've got an official descended channel here that it needs to break out of, and it really doesn't seem to be. So if the floor is $10, why did I bring up the cost of mining and producing silver? Well, because you know the floor fundamentally is $10 and $10.56. So we've got $3 of room here for this thing to actually hit the bottom. So the bottom is like break even of mining costs, and that's true for fundamentally all these. So that's where we use a mix of fundamentals and technicals, right? So going back, this was the same day as gold, couple sweet buying days to accumulate more silver, and now it's just floating along. We see now it's dipping around the same price, but the strength indicator is telling us something differently. So the strength indicator is going up. That's good. That means there's more volume overall happening here in silver. But yeah, most people don't know these things. You need to know the cost of mining for gold, for silver. Overall supplies is great numbers to know so that you can understand the dynamics of supply and demand with those commodities, with those assets, and then just keeping an eye on it every single day helps you kind of piece that together as well, right? So that's all I had for you, my friends. I just wanted to bring you up to speed on that. Chinese retail money, I heavily look at that because I think it's an important macro piece. And you see we're still fighting some lows on gold and silver, but it's things are looking up in the macro, because if it stays down, less people mine, price goes up. Sentiment changes with US dollar, global currencies, they start to accumulate more and the price goes up. So no matter what, we win when we hold gold and silver on the macro play, right? So the micro might look painful, but the overall long term is looking good, my friends. All right, that's it. See you in another video. Bye.